Welcome back to another explainer, everyone. Look, if you've spent, any time online lately, you've definitely seen the get-rich-quick hype around dropshipping, right? It's always pitched as this magical push-button money printer. But today, we are tossing all of that hype right out the window. We're putting on our market research hats and taking a strictly data-first approach to uncover the actual reality of dropshipping in 2026. We're going to dive into some live market research, look at actionable product validation, and break down the operational strategies you need to build a resilient, globally targeted business. So let's start with a pretty brutal reality check. Just look at this number, 10%. According to recent data, only about 10% of dropshipping sellers actually achieve success in their first year. Yikes, right? But here's the thing. Most fail not because there isn't demand out there. They fail because they treat dropshipping like a scratch-off lottery ticket, instead of treating it like a real, actual business governed by strict unit economics. But hold on. Immediately contrast that harsh failure rate with this massive figure, $590 billion. That is the projected valuation of the global dropshipping market in 2026. And it's actually expected to blow past $2 trillion by 2032. So the stakes are incredibly high and the opportunity is literally massive. The question isn't whether dropshipping works anymore. The real question is, how do you mathematically ensure that you land in that winning top 10%? All right, here's our game plan for today. We'll be covering the state of the market, winning niches for 2026, data-first product validation, evergreen versus seasonal trends, ethics, risk, and suppliers, and finally, the future of dropshipping. This is the exact framework that separates the thriving brands from the abandoned internet storefronts. Okay, let's dive right into Section 1, the state of the market. So, global e-commerce sales are projected to hit an absolutely astonishing $7.89 trillion by 2028. That's trillion with a T. But I want you to look closely at this regional breakdown. While North America is obviously a massive player, the Asia-Pacific region is actually leading the pack with over 35% of the market share. And this is a huge takeaway for us. Cross-border buying is the new normal. If you're an operator based in, say, Hyderabad, India, you have a highly viable, realistic path to target the US, the EU, or Australia. You don't need to be local. You just need the right product and reliable global suppliers. Moving on to Section 2, winning niches for 2026. And spoiler alert, we are focusing entirely on the boring but highly profitable. Listen, finding products isn't about guessing the next goofy TikTok fad. We want utility-first categories. We're talking about products that solve real, everyday problems where buyers have almost zero brand loyalty. Things like sustainable home goods, phone accessories, pet wellness, tools, ergonomic office gear, professional consumables, car organization, smart home gadgets, plant care, and travel organizers. We're completely avoiding anything that requires safety certifications, so no medical devices, no baby safety items. And please, remember the golden rules here. Your average order value, or AOV, absolutely must sit comfortably above $15, and you need a 3x markup. Period. If a product costs you $10 to source, you need to sell it for $30. That margin is what covers your ad spend and actually ensures you stay profitable. Because at the end of the day, your unit economics are literally everything. Take a look at this. A sustainable home product targeting the US or EU markets can easily command an average order value between $45 and $70. And look at that margin potential, up to 5x. Or think about ergonomic office gear. Something as boring as a monitor arm can hit a $50 AOV with a 3x markup. These incredibly unsexy items yield amazing margins because the purchase is driven purely by utility. The customer just needs a solution. They don't care if it has a fancy logo on it. All right, Section 3, data-first product validation. Let's see how we actually prove there's demand. Okay, here is the exact Google Trends playbook you need to use. First, always set your time frame to 5 years. A 90-day view might look fantastic, but pulling back to a 5-year view tells you if a market is actually steadily growing or if you're just looking at the tail end of a dying fad. Second, compare your search terms side by side. Third, check out the regional map. This is huge. Targeting ads for evaporative coolers in super humid Florida is just going to burn your budget, but run them in dry Arizona and they sell like crazy. Finally, keep an eye on the Rising Queries tab. That's basically your early warning radar system to spot breakout trends months before your competitors even know they exist. And to take things a step further, you really should be leveraging competitor spy tools. Programs like SpyFu give you fantastic SEO and pay-per-click snapshots. Espionage goes super deep into a competitor's multi-year PPC history and their landing page angles. Then you've got Price to Spy to automate competitor price monitoring, and Owletter to track their email promos. If you pair this kind of intel with a tool like Minia for tracking ad creatives, man, you don't have to guess what works anymore. You can literally reverse engineer a successful competitor's entire strategy and just scoop up the market gaps they're ignoring. Next up, Section 4, Evergreen versus Seasonal Trends. When you're analyzing search momentum, misinterpreting a trend line is honestly one of the most expensive mistakes you can make. Evergreen products, think phone cases or resistance bands, these show steady, rolling demand year-round. They give you predictable, reliable scaling. On the flip side, seasonal products like, say, ice bathtubs for New Year's fitness resolutions have repeating yearly spikes, but they create super lumpy cash flow. The smartest operators out there, they build a solid foundation of 2 to 3 evergreen products, and then they rotate in seasonal items to catch those waves. But a quick pro tip, you absolutely must start testing your ads 6 to 8 weeks before that historical spike hits, or you're already too late. Moving on to Section 5, Ethics, Risk, and Suppliers. This is where businesses live or die. To really understand the operational risk in dropshipping, we can look at it through a really fascinating lens, fiqh muamala, or Islamic finance principles. The first concept to know is khiyar, which essentially translates to uncertainty or risk in a transaction. In the dropshipping world, this perfectly describes the massive information asymmetry between what you're displaying on your shiny storefront and the actual boots-on-the-ground reality of your supplier's stock and quality. Basically, you are taking the profit without bearing the actual risk of owning the inventory, which can lead to some severe quality control nightmares. And this core dilemma is perfectly captured by the principle of Bai' la tamlik, which states, do not sell what you do not possess. The ethical issue here is crystal clear, right? Selling inventory you don't actually control can invalidate the fairness of the whole transaction. And from a pure business standpoint, if you don't control that inventory, your supplier's failure instantly becomes your brand's failure. That means angry customers, chargebacks, and ultimately suspended payment gateways. So what's the fix? The solution is wakala bil ujra, which means an agency with a fee. In modern e-commerce terms, this means you absolutely cannot just blindly pass orders to some random overseas supplier. You need a clear, structured, vetted agency agreement. This kind of contract protects your buyer from receiving garbage products, and just as importantly, it protects you from business-destroying chargebacks, keeping your financial risk as low as possible. Make no mistake, supplier quality is your ultimate make or break factor. Finally, Section 6, the future of dropshipping. Let's look ahead. As we look toward what's going to be a heavily saturated 2026 market, the barrier to entry has honestly never been lower. But on the flip side, the barrier to actual success has never been higher. AI-powered predictive tools like Jungle Scout or Sell the Trend are going to automate the trend spotting process almost entirely. And because everybody is going to have access to that exact same AI data, simply finding a good product won't be enough anymore. Your success is going to depend entirely on your unique brand positioning, your strict adherence to margin discipline, and the speed and reliability of your suppliers. So I want to leave you with this final, really provocative question to think about. Are you building a resilient, data-backed brand, or are you just chasing the next viral fad? The 10% of sellers who actually make it, they treat dropshipping as a genuine, data-driven retail business, not some cheap shortcut. Do the research, respect the margins, protect your customers, and build something that actually lasts. Thanks so much for learning with me today, and I'll catch you in the next explainer.